Advisor Show. My name is Jay Coulter, and joining me for this episode is Dana Cornell, the founder and CEO of Cornell Capital Holdings.
Our mission at Resilient Advisor is to have a significant impact on the retirement crisis by educating and empowering financial advisors to better serve their clients. This interview is part of the How I Serve series, where we interview top financial advisors who are making a difference in the lives of their clients.
Prior to starting his company, Cornell Capital Holdings, Dana Cornell was a very successful financial advisor, having spent 15 years serving clients and finishing at Morgan Stanley as an executive director. He was a certified financial planner and also held the prestigious SEMA designation. Dana left behind that career to pursue his passion in real estate. Dana, let's start with this. Why did you leave behind a very successful business to get into real estate?
Yeah, first, good to see you, my friend. Thanks for having me on. That's a great question. It's one I get on a daily basis at this point. So, Jay, quite honestly, as I built my business at Morgan Stanley and we managed a large amount of assets for individual clients, I repeatedly heard the same things, which built the same frustrations. How can I get consistent returns to match a financial plan? And ultimately, we're all saving for one reason, right? Which means create a passive income stream. So how can I generate a consistent return to generate a consistent passive income stream? And I was really getting frustrated by the inconsistencies of publicly traded markets and just the inability to properly match these people's expectations to what the market was giving them. Even though we've been through a great 10 years, it's still dependent on your timing of when you started, how you invested, so on and so forth. So quite honestly, I was investing in private real estate myself personally over the last 5-6 years before I left Morgan Stanley. And I got to personally experience the ride that you take when you have a plan and you have an investment that's backed by a hard asset, something you can go see and feel and touch and understand how it works, which gives you a lot of peace of mind. But it's very predictable. It's very consistent. You can follow the numbers. So once I got to a point of, and then on top of that, you look at, what the projections are for the next 10 years for most major financial firms, I almost felt I was doing my clients a disservice by not being able to offer this to them in this capacity. So it was my decision, because I'm truly client focused and I want to participate with them just as well as I do in this type of investment, that I needed to make a change for the best, move to really focus on what my passion is, which is truly being able to go deep, which it's not for all of your money, of course, but it is for the appropriate amount that can allow you to generate a consistent return and a consistent income stream that has a lot of tax efficiencies. And I'd much rather do that and go deep and make an impact with people and my clients than kind of give a very canned, generic, broad, untailored experience, which is how I quite honestly felt like most of our relationships ended up being.
So at its core, and I want to get into what those transactions look like, but at its core, you made this change for your clients. You made this change so that you could better serve your clients going forward. Is that fair?
I did. Yeah. A lot of people think I'm crazy to walk away from a large book of business we managed. My group managed a little over 1.3 billion at the time that I left. And not most people that make executive director status under the age of 40 just decide to resign from, a firm like that, which I have all the respect for in the world. I just thought it was my calling to do this and be very specific and niche focused in what I'm doing out of respect for my clients and my partners. For me, it made the most sense, to just walk away, because I'm laser focused on making a deep impact with my clients and in the world in general. That's just kind of how I live. So to me, it made sense. Some it might not, but to me, it did.
And in full disclosure to listeners and viewers, Dana has been a consulting client of mine for 5 years. When he came to me with this idea of leaving behind running a practice that manages $1.3 billion to pursue real estate, I was not on board with the idea at first, for sure. what I learned through the process is that Dana's passion for real estate and his passion for it as a tool to help investors through their retirement years came through. And he's been very successful in the launch of this company. And I frankly have a limited understanding on what these products are. And I want to use this platform to kind of flush this out. So Dana, tell us a little bit about what these real estate offerings are that Cornell Capital Holdings offers.
Yeah. So what I found in my personal dealings and working throughout just investing in alternative assets over the last 15 years, for clients under the umbrella of my prior firm, if you can go directly to the source, meaning a developer, and bring an institutional level project to an individual investor, the benefits of that are massive. So to answer your question, I focus specifically right now on self-storage developments. And we do that in three ways, whether it is new development, ground up development, repurposing old facilities. A good example is our firm just repurposed an old Kmart facility, or buying an existing facility that has enough capacity to build out to our minimum size criteria. So those deals, think of it as we're starting a business together. We're all involved in the same project, the same opportunity. It's very fee efficient. There essentially is no fee to the client. You're going in as a limited partner in most circumstances. I'm investing in every deal that I bring to my client base myself. And we're going along for the ride to build something substantial. But the most important thing is it's predictable. I can walk you through the numbers. I can let you see and understand exactly where revenue comes from and what's your share of that. So that's probably the best summary I can give you. I mean, that's really what we're doing here, is just creating an income opportunity, an opportunity for you to be a part of something that can make a deep impact for a relatively small portion of your total net worth.
Let's get specific. The transaction that you were talking about with the Kmart repurposing, what exactly were you doing? And explain it to me like I'm 12 years old.
So I'll do my best. So this was an interesting one. So this was a darkened Kmart facility. It had not been redeveloped in the last 15 years. Few people had tried. Create an opportunity for us, because actually, if you follow the big box stores, they've done all the feasibility studies on, traffic count, residential around the area. They're already in good locations. So this created an opportunity for us. And I should just kind of mention self-storage. The reason that I'm focused there versus multifamily or another type of real estate class right now is the demand for that is twofold over the next 10 years. And I think self-storage is changing. It's a very dislocated market because it's an anomaly in the sense that 75% of that market is owned by mom and pop individual units, as opposed to corporations, that type of thing. So there's an opportunity to come in and make a big impact, as baby boomers age out of that market, so on and so forth. And in this particular case, we're able to come in, pick up a 100,000 square foot building, structurally in excellent condition. The previous owner who tried to develop it, and various things happened that didn't happen for him, but put a new roof on, new sprinkler system. So we bought the building and 22 acres of property right off a major highway exit for literally what it cost him to put the roof on the building. So what that allows us to do is, when we build it out, there will be 4 tenants in there as well, which is all a complement. The project is supported by our self-storage, which is about 90,000 square feet of storage. Half of it's climate controlled, half of it's your traditional outside non-climate controlled storage. But we're all into that project for 50 cents on the dollar as it relates to stabilized value with the revenue that's supported by that project. So it's a very efficient way. It's very low leverage when we get into it. There's a lot of room for upside potential on that. And like I mentioned, the face of self-storage in particular is changing, right? It used to be hidden in dark places, garages, behind warehouses, that type of thing. These things are bright, they're vibrant, they're right on the main thoroughfare. People like to drive by it and see that they can see where their things are, even if they don't stop there. So That allowed us to do our self-storage and offer opportunities for 4 other tenants, which all quite honestly was net income to the project. So that ends up being about a 2.5 year time frame that your money's invested. If you were to come in as a partner with us, 2.5 year time frame while you're invested, we're paying a 10% preferred interest while your money's invested. And because you are an owner of this project, when we stabilize the property, put long-term debt on it, we're participating in refinance proceeds as well, which I'm sure you know, but loan proceeds are tax-free. So essentially it equates to, long story short, without getting into a lot of detail on numbers, it's a 20% annualized return over 2.5 years, and a large part of that is tax-free to the investor. The beauty of that is your money's back in your pocket, and I always like to separate how long is my money out, what did I earn on that money while it was invested, and that's a 20% annualized return, but you still own your residual interest in that property. So you get your cash flow and then eventual sale proceeds for as long as we own that property. That could be 3 years, 10 years, but it's all a bonus. So it's a very efficient, very impactful way to build wealth and create an income stream.
You know what's interesting, Dana, is I live in a nice suburb outside of Atlanta, and I've been getting frustrated at how many storage units go up in prime spots, and I couldn't figure out why somebody would buy the prime spot and put it in a self-storage. I now know why. It's because they can rent it out, and people like to drive by and see where their stuff is. Is that right?
If you dig into the studies of just the psychology of it, it's a game changer for self-storage, just for a person to be able to, like I said, even if they don't stop, they're driving by their belongings every day, and it's a peace of mind type of thing. And then you throw on the fact of just housing changing in general, which equates to the upcoming demand for this over the next 5 to 10 years. With baby boomers downsizing, younger generations not moving into single family homes, people just being more efficient in their space, it's a very cost efficient way to meet the needs of Americans, which like to acquire a lot of things, but not have a lot of living space, or at least a changing dynamic there. So it's a very efficient asset class. One of the things I love about it, and I researched it all different ways because I'm a risk manager by nature. One of the things that stood out to me, 2008, when we all know what publicly traded markets did, and I was on the phone with clients trying to coach them through a very nerve-wracking, to say the least, time, very scary time of people losing wealth and wondering, we all know long-term things rebound and come back, but you don't know when. And if you retire during that time period, that had an impact on you. Self-storage was down 4%, and only in the value of the building. Your cash flow never changed. So again, when clients are coming to me asking me for consistent returns, predictable income, I couldn't find a better vehicle to meet those needs. So that's why we ended up here.
So Dana, this interview is part of the How I Serve series on the show, where top financial advisors come on and they talk about how they serve their clients. And this is clearly a differentiated story and unique to the other folks I've had on the show, as your focus is on the private markets. But generally speaking, when looking at an investment, a financial advisor looks at the old 4 Ps: performance, which we've talked about, philosophy, process, which we've covered, but people's really what makes the difference in the private space. Tell us about your team and how your team approaches deals.
Yeah, great question. I think it's a huge differentiator, not only from my old world, but really from any of the other real estate companies that I've come in contact with that operate in this space. So myself, obviously, I kind of fit in a unique spot in the sense that I've been, you mentioned it, certified financial planner, certified investment management analyst. So when I come into this, I'm analyzing every deal just like I would if it was on a major firm's platform, to see track record, history, ability to pay, where did things go wrong? Most importantly, it's one of the first questions I ask any operator or developer. And I need to hear them because, of course, things will go wrong, things get delayed. That's just the world that is. So to answer your actual question, the team consists of myself, which everyone has heard my background at this point, CEO, Joe Evangelisti, builder in the Navy, 25 years of building, developing experience. I think what makes him unique is he's experienced every facet, from single family homes, new build single family, multifamily, and he really was the vision to put the self-storage team together about 2 years ago, seeing the opportunity and the need and the demand for this space in particular. That's complemented by our partner, Brian Brogan, who has a very similar story. Family construction business, was working with his dad when he was 8. That's a really interesting, pretty neat story. Came up all the way through, same way. Home builder, single family, owned thousands of homes that way, multifamily, and now kind of runs the operational side of the self-storage, which is called legacy developers. And the third pillar of that, somebody who I feel like we're fortunate to have on our team, is a gentleman by the name of Barry Sherman. Barry's architect by trade. He has only done self-storage developments for the last 30 years. So his knowledge and experience is unmatched, in my opinion. He's done over 100 of these facilities, all shapes and sizes. He designs, helps us overview pro forma financials, really helps us put the package and the design together, and blesses each project. So when you combine the 4 pillars of this business, specifically in the self-storage space where we're focused now, you really have 4 diverse backgrounds that all come together to build a very strong core team to, 1, produce a great product, and 2, help you make a good informed investment decision, which is key.
So for podcast listeners and viewers, I'm pulling up Dana's website now, which you can find at cornellcapitalholdings.com. Dana, as we wrap this up, tell us a little bit about the client experience if they visit Cornell Capital Holdings and start to go through the process with you and your team.
Yeah, I appreciate that. So oftentimes, the typical experience is someone will find our website or hear about us. You fill out your investor profile form, which is a very short form, just giving me a little bit of information about you, what you're looking to accomplish. And then you either book a call or a Google Meet directly with me, or if you don't, I call everyone back personally or my direct staff within 24 hours. That's really just comes from my old roots of getting to know the client, understand where you're coming from, what you're looking to accomplish, and then I'll let you know a little bit about what we do and what we have coming up, see if I can help you make a good informed decision. From there, we just build your confidence, build your investor knowledge on the projects that we have coming up, which we have about probably 3 to 4 every quarter. They do fill rather quickly, so it is first come, first serve. But once you're in my investor network, everybody has the opportunity to jump in. So I make myself available every day. I'm on the phone talking to clients, letting them know about projects, answering any questions, building their knowledge and confidence. And then once you decide to invest, you simply let us know, and we put you into our investor portal and walk you through the steps to do all the legal document review, which of course we'd like your counsel to review as well. Once you're comfortable with that, we sign an agreement, you go in as a partner with ours, and the rest is taken care of for itself. One thing to note, which I think is a little interesting, we do pay income monthly, which is pretty unique in this space. So our investors have really given me a lot of feedback, and that's something we took back to the group and said, hey, let's scratch quarterly, let's do it monthly. Seems to be a little more consistent and some positive feedback there.
As the old saying goes, fast pay makes for fast friends. So
That's right.
Dana, I really appreciate you coming on the show. This has been one of the more unique episodes I've had, and definitely one of the most unique for the How I Serve series. It's a unique value proposition that you bring, and your story's unique, leaving a billion-dollar-plus team to come and work on projects that you feel best serve your clients. So for podcast listeners, please visit cornellcapital.com. That's cornellcapitalholdings.com. And then for YouTube viewers, just click the link below in the notes, and it'll take you where you can learn more information about Dana and his team. Dana, thanks so much for coming on.
It's been my pleasure, Jay. Thanks for having me.
Important information. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security, and you should consult your attorney or tax advisor. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such. Pinger Systems, LLC, doing business as Resilient Advisor, was compensated for the production of this content.